Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 19th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about economic and geopolitical environments, how that is going to impact our overall market analysis. Well, I do the same thing in these daily market commentaries, but I layer on top of it option strategies that I find to implement around those assumptions we come up with from that economic, geopolitical, and market analysis. So without further ado, let's check out the economic data across the pond. Not really a whole lot to see there. We did get some good economic data here in the United States in the form of building permits. Now remember, yesterday we saw the National Association of Home Builders Index come in slightly better than what was expected. Well, the building permits came in better than expected as well at just over a million permits. One thing to note about that, though, they can pull as many permits as they want. They don't necessarily have to start building on that, so we're going to have to keep an eye on that. But speculation is, especially in a time like this, that they are planning to build. We got housing starts, though, waning a little bit, coming in at 890,000, expected to be 95,000, so slightly lower than expected there. We did get a revision to last month's number up by about 50,000 or so. So not really making up for the headline number, but very close. All right. We also have Senator Powell, or sorry, the Fed Chair Powell speaking, Jerome Powell testifying in front of the Senate panel. A lot of good questions coming out from the senators, which we are welcoming, as a matter of fact, but there are some tough questions coming out there. As a matter of fact, Senator McSally from Arizona just got done asking her questions, which were very good as well. Anyway, moving on, we've got Kashkari speaking here in a little bit as well. But on to the overall markets. Crude oil making a little bit of a pullback here, only off by about 16 cents or 17 cents right now as we speak, but still holding on to that 30 handle. I think it's a little bit overdone here. As a matter of fact, I was looking at a couple of different trades to short oil-related products such as like USO, but USO, there's just not really anything in there. I mean, it's only trading around $16. The implied volatility around it, actually trading around $24. Sorry, 16 was the low. But just not a whole lot in there. I don't really want to buy puts because I don't know that I can go much. It just hasn't really made this rally like we're seeing here in crude oil. So I'm kind of on the fence of what I want to do with that. But I am looking for a couple of trades that I do want to add to my portfolio in regards to crude oil. And then we move on to the overall gold picture. Gold's starting to make a bit of a push to the upside after yesterday's big sell-off. You know, yesterday the Dow was just up huge, almost 1,000 points at some point in time, or actually towards the end of the day for the most part. So that caused a big fall off in gold as we imagine taking money out of that safe haven and putting it into more risky assets like equities. That's what we were seeing happen a lot yesterday. Now today, bit of a mixed bag across the board. We're seeing a little bit of a push back as I think a lot of these short coverings are coming into the market today, pushing gold up about $10. But I think it is right in and around where gold should be in regards to its value. I think that right now we're actually even seeing limited supply coming out of Alaska because they've had a much shorter season. They had late season snow, a lot of good powder up there for all those people that didn't get to go skiing, but that caused a much later start. They weren't able to start ripping up the ground in order to get past the permafrost because of all the snow there. All right, so it's not one of the major gold producers, but that is, just something to keep an eye on, that they are going to be limiting some of that supply coming out of the gold areas like Alaska and the Yukon. Excuse me. All right, bonds moving higher by about a half a point here today. Yesterday we did settle below that 50-day moving average, and I talked about that. When we get below that, that is starting to show some weakness longer term. We got below the 9-day and the 50-day, so that is signaling a little bit more of a longer term weakness. But at the end of the day, I've talked about this. I do believe that we are going to see, excuse me, we are going to see gold to continue to trade in a range, bonds continue to trade within in and around kind of those lines there, which lines up at around 78. We are testing that lower boundary there, 78, 77, and on the upper end at 83. So I think that that's going to be the foreseeable future here. And when we see that happening, we're going to really see this. As you can see, we're getting a lot of buildup on the time. Now the time is acceptance of value. That's what we used to use on the floor more than volume. We weren't able to get the volume numbers as quickly as we could see where the price was changing hands at any given time during the day. So we would mark down a time slot for that price trading and build up a volume node or a time node there, and that kind of signaled acceptance of value. Well, the same thing going for the volume, but I do expect this to build out a little bit more and then get this paradigm to start shifting a little bit higher here towards that 180-ish, 181 handle there, all right, which would line up right in between those two lines that I just had drawn up there, those two lines in the sand. All right, VIX is coming off just a little bit today, as you can see, just off a couple of pennies there, but that has to do with the equities having a bit of a mixed bag. Now, we had that big rally yesterday, and it feels like some profit taking is going on right now in the equities. You know, there's a point here where we're seeing tons of people come into the markets, newer traders. Those are usually buy side. As a matter of fact, if you know who David Portnoy is, he's the guy that started Barstool Sports. He, because he's not able to gamble, is now day trading. And Davey Day Trading Group is the hashtag that they're using. And yesterday he was up huge. That signals to me a little bit of a is giving me a light bulb that goes off, a little warning light bulb that might be getting a little bit overdone, as there's too many newer people coming in on the buy side, and once that ebbs a little bit, we could see more of a correction than what most people are expecting. Now, we got that big move off of can't think of the company right offhand right now, starts with an M, that may have come up with a cure for this, or at least a vaccine, and that gave us a lot of elation to the upside with yesterday's move. Now today it seems like it's a bit of a taking some profits here. Yes, we are starting to build a volume node up in and around this area that we currently are, which could be a good thing right now with the equities kind of trending sideways, kind of digesting all of this information that's coming out. It is still touch and go as we are moving through this whole pandemic. Now the NASDAQ, though, on the other hand, is making a nice move up 60 points. Now, but remember, the NASDAQ has a lot of these tech companies that are in there, like that are going to help build out these home offices. So that, to me, isn't as concerning of a move, because I think that those companies are going to do well going forward. Then we have the E-mini S&Ps pretty much unchanged on the day, but as you look at this chart here, it does look very similar to the Dow Jones over there, where we are starting to trend sideways here a little bit, right in between those two volume nodes. And I've talked about this for quite some time now, that I do expect us to start building up some of this volume and time right in between those two Fibonacci's, and which just happens to line up with my points of control. So those are very key levels right now. Usually Fibonacci's, we're going to start seeing those have support and resistance, but when they line up quite nicely with the points of control, those points of control are acting like magnets, so we could start seeing it like a jumping bean in between those as we start trading some volume in and around those areas. So keep your eyes out for that. I don't think that we are going to see any massive moves in the E-mini S&Ps, at least for the remainder of this week. All right, so let's talk about the breakdown of the E-mini S&Ps. You can see overnight inventory got flushed themselves out, so it was pretty balanced. Now coming into today, there's no real directional move happening. As we've looked at all of the other charts, there's not a whole lot going on right there, but we are staying right in between yesterday's value area highs and value area lows. So that means it's an inside day. So that tells me there's some profit taking going on, people taking a back seat, maybe sitting on their hands, seeing which the next shoe to drop is, whether it's good news to give us some room to the upside, or if it's kind of some bad news that some of these rumors out about the vaccine aren't as solid as what we were expecting. So today seems like a pause day. Everybody's kind of taking a breather after yesterday's big rally, because yesterday we made no attempt to flush out anybody on the short end, and today it seems like there's some profit taking going on, and the shorts are probably feeling the thumb screws on them right now. All right, so just a couple of talks here about what I am doing. EA Electronic Arts is something that I've had on. If you guys remember, I got put this stock quite a bit ago on the sell-off. Talked about this. These are things that people are going to be consuming, if you will, while they're sitting at home. My kids are playing on these games all day long, so they are doing very well. And I don't know if you know how these games work right now, but it's not just you go out and buy the game anymore. It's actually people are purchasing in-game ups, if you will, so that they can make their teams better and things of that nature. So they're doing very well as these kids are consuming and purchasing online through these different types of games. So with that being said, I had put on a ratio call spread, which means it's a call spread, but I added in another short call against it, lower my overall cost basis, maybe take advantage of a little bit of an up move here. If it went to the 52-week highs, I was happy to have some of those stocks pulled away from me. Well, the two short calls expired worthless, and I got long about a quarter, increased my position by about a quarter. So I am looking to take that trade off that I added with those puts at 115. So I was long to 115, short to 120s. So I am long an extra contract in my, or an extra quarter of my position at 115. So with that being said, I am going to still look to cover some of those at 120 if we get up there. So I have a GTC order in there that if we trade 120.16, that's where I'm looking to get out. So just wanted to talk about that. Even though it's a working order, I haven't gotten filled on it, I am looking to get out of it. And same with GLD. If you guys remember, I have on an iron condor in there, and that trade is very close to 50% of my max profit on that. So I am also looking to cover that trade as well. We did that for the iron condor webinar, and that is in the June, and I have the 146, 151 put spread, and then how you create the iron condor, you put in a short call spread against it, and I did that at the 173, 178 call spread. So those two give me a swath of being right. If market bounces back and forth, which is what I expect, I think we've gotten a little overextended here in gold. Personally, I do think that it's going to stay between, at least in GLD here, we could talk about between that 163.50 handle and the 157.60. So I do expect us to kind of trade and stay within these two Fibonacci lines right there, build up a bit of the volume node here as well. I think that's where we're going to be finding value. I do think it's a little bit overextended at this point, especially ahead of gold. I mean, gold didn't make its 52-week highs. It came a little close, but it didn't quite go that far. And I do expect that we're going to see a bit more of a pullback here in GLD back into the area of importance that I believe. So that being said, when that happens, we've got that theta decay working in our favor. We've got some volatility coming out of it, especially when it starts settling down like that. That will allow me to achieve that 50% of my max profit rather soon. So right now it's trading around 71. I'm working a 66-cent bid in the markets as we're moving along there. And I did mention Portnoy, right? If you guys remember Portnoy, he has Barstool Sports, and PENN actually bought, I think it was about 30% of Barstool, and that was quite near the high. I think it was around when it was trading around $38, which is very near the high there. As you can see, the market really fell off. If you remember though, I got into this trade when it got below $5. I was talking about, well, at this point in time, a lot of these funds can't hold stock when they're below $5, so that kind of makes that capitulation happen even faster. I was able to get into this stock at around $4.50. So I bought some $4.50, put that over into my IRA. And today something, or actually even yesterday, what we saw was breaking outside of the value area. But not only that, we got above this little trend channel that I had drawn quite some time ago that we were starting to track. We broke above that. Now it's been exacerbated to the upside, as you can see there. I'm going to stick in this trade because I do expect this to be a longer term trade. I think that these guys are going to do very well. That Barstool Sports is probably helping keeping them afloat, especially during this pandemic. I even saw that one of their podcasts beat out Rogan. Rogan's been like the podcast king, and all of a sudden one of their podcasts was the #1 podcast out there. So those guys are printing money. That's helping PENN, at least right now. And then once we start seeing more sports open up and the gambling start picking back up, we're going to start seeing that pent up demand for the products that these guys service, so which is gaming. So I think that they'll do very well. So I do have that as a long-term trade. So I'm not looking to cover that, despite the fact that usually I get a little bit more anxious when we start getting closer to those value area highs. It feels like it's getting a little overextended, but I think that this is a company that has done the right moves and are setting themselves up for a nice move to the upside. And that's all I've got going on right now. I haven't added anything or taken anything off. Like I said, all I have is some working orders in there, and I'm sticking with my position the way it is because until it starts looking a little bit more dicey, which I do have an itchy trigger finger to cover some of these things. Now, because of some of my worries in and around those newer buyers, I think that we could see a bit of a sell-off based on that. Because the market, we used to say on the floor, will try to hurt as many people as it can, as often as it can. I think that's a little bit wanky of a way to say it, but basically you get the gist, is that the market is going to try and inflict as much pain as possible on as many people as possible, I think is the way we used to say it. All right, so without further ado, I'll let you guys go because I'm getting a little bit long on this webinar, or on this daily market commentary. And one other thing, please go over this disclaimer here. Past performance of any trading system or methodology is not necessarily indicative of future results. All right, so if you can't take that, take it easy.